Hello and welcome to Crypto Weeklies. Today we are going to discuss Algorand, its token ALGO, conduct machine learning based price analysis, undervaluation, overvaluation, and accumulation related analysis, as well as regression based analysis. None of the content is financial advice. This is the cryptoweeklies.com and this is the homepage of this of our website. On it, there are almost charts for every single top 100 cryptos by market cap, as well as their machine learning based analysis, regression based analysis, and accumulation strategies. One of the chart that we were introducing was the Algorand's price color coded based on risk level, based on its proportional risk on a polynomial regression based function drawn up on its price action. The base case function is at around 37 cents. Right now the price of Algorand is at around 13 cents, so that means based on the fair value regression analysis, Algorand is undervalued. How undervalued? If you normalize the risk behavior across its entirety of its price action, the current risk is at around 0.01. That means the risk per the risk level, this is the best time to dollar cost average Algorand. You can see historically speaking, whenever the price was in this risk band, that is this purple or plum colored risk band, that was historically speaking it's a good time to dollar cost average. Again, you might say that during the bear market of 2022 the price kept on declining less than when the price was less than 50 cents. No model is perfect, but at that point in time, we didn't have the data. This is not some retroactively fitted model. In back in May of 2022, we didn't have any more data that to support that price would go below 30 cents, like it did at around 10 cents and slightly less than 10 cents in October of 2023. But you can see still over a longer time horizon, there were opportunities to get back into the mean reversion trade whenever the risk level went as low as 0.01. So again, if there is a mean reversion trade back for Algorand, that back to its fair value at around 37 cents. Right now, a price of around 11 cents or between 11 cents and 13 cents makes a 3x from the current price. If we were to look at the time weighted average price, this is again one of the other accumulation strategy for Algo. You can see that the time weighted average price for Algo is at around 50 cents, and whenever the price is below 50 cents, the key idea with this model is that this helps us identify the risk score. Right now the risk score is at 0, as the price is sufficiently lower than the time weighted average price. This model also helps us identify tops based on the proportional difference between the price and the time weighted average price. So these are the two accumulation related models for Algorand. Before we go any further, we'll look at the overall crypto market and what are some of the narratives in the market. XRP, the bullish sentiment is back. Also the discussions again related to Cardano. This is all of the content related to crypto over the last 7 days on YouTube and X, and looking at which narratives are gaining popularity. Definitely bullish sentiment is back. CPI and Fed related discussions are over here. There are some bearish narratives as well as price predictions, as well as inflation related talks and US presidential related candidate related talks as well, and BlackRock and Ether related discussions. If we were to focus some attention on the overall crypto sentiment, the sentiment score has risen from lows of 50 to about 88 now. There are a lot of bullish narratives. You can see they are scraped out of based on our machine learning algorithm. Looking at the last 24 hours related news related to crypto, you can check out each individual narratives on cryptoweeklies.com. The content is available over here. The crypto TLDR, the news TLDR summarizer, you can check it over here. In terms of the PeakValley, which is a one single snapshot of what are the risk levels of the market, the current risk score is at around 0.18. Again, this means we are in the green zone, the second best time to enter the market, low risk environment. Risks are slowly rising from at one point, that is September 6th, the risk were at around 0.14. Now they are 0.18. If and when they go beyond 0.2, that's when the color code will change from green, which is a safe zone, to moderate risk, which is yellow. Best time to DCA per this model. The lowest risk, which is in blue in color, like it was for majority of late 2022 till about end of 2023. So you can check out how this is calculated on our website, as well as last not the least is the SMA based risk. To check out the overall market sentiment is coming in at between 0.31 risk for BTC. This is calculating the risk for BTC and ETH, which together have about between 60 to 80% of market share of crypto markets. And again, ETH risk at around 0.23, BTC risk at around 0.31. Both are in this low risk band at this point in time, based on their own price and 20-week moving average comparison. If you were to look at Algorand now, the rally over the last day at around 2% by market cap. This is ranked number 60. By volume, though, there is ranked severely less than that at around 159 of the total or max supply of Algorand at around Algos at around 10 billion, out of which 8.2 billion are in circulation. That means at around 82% of supply is in circulation, which would mean that any impact of any token dilution over the last year, you can see this is the price chart, and if you toggle between price and market chart, cap chart, they are essentially the same chart. That means all of the or most of the gains in growth in market cap, from let's say from 700 million to about a billion, about a 30% increment, 30 to 40% increment in market cap would get reflected in 40% gain in price, from 9 cents to about 13 cents. Again, 4 over 9, you can see slightly higher than 40%. They're kind of similar to market cap growth. So that means growth of prices in line with the market cap growth, which is a good sign if you are looking for cryptos which do not dilute over time. So again, this is the weekly analysis of Algorand on TradingView. This particular chart analyzes if the price is lower than the 200-week moving average. The current 200-week moving average for Algorand and token algo is at around 55 cents. Price is well below that. Now if we focus our attention instead of what has happened to what could happen based on our machine learning based price forecasts, this is the price forecasted by our model, trained on weekly price action in white. The base case is pink, the 1 standard deviation bull case is in yellow, the 1 standard deviation bear case is in green. So the base case for our model price action could be between 12 cents and if you round it out, between 12 cents and 13 cents for the remainder of the year per our analysis. The bull case, if the market have a bullish bias like they have slowly turned bullish over the course of last week, the price could see itself between 14 cents and 19.4 cents. This is at around 68% or 70% chance that prices stay within 14 cents and 19 cents, and equal and opposite, slightly less than a cent to about between 9 cents and about 11 cents. That's the bear case for algo. Now if we were to witness a mania phase like we did back in October 2023, those moves were similar to more similar to a 2 standard deviation or a 95 percentile confidence level moves, and in that scenario, if crypto witnesses those kind of moves like they did in Q4 of 2023, then the forecast or ceiling could be between 15 cents and up, all the way to about 34 cents. So the purpose of this forecasts are not to tell what will happen in the market tomorrow, whether the market will go up or the price will go down. That is determined by market force exclusively. No model can predict that, but the purpose is more towards what if the price were to go up, how high can it go? If the price were to go down, how low can it go? Using historical data and statistics and machine learning techniques. That was the intent. And if you are interested in week by week report in a tabular format, all the content is available on the bottom of the screen. The base case is the column in the middle. To its left are the three bear cases: 68% or one standard deviation, 95% two standard deviation, and this is three standard deviation bear cases. Similarly, bull cases to the right, and they go about half a year or a 26 week look forward into the future. And towards the end of February, those are the base cases. The two standard deviation bull case is at around 45 cents for algo, again for almost 3 to 4x, 3.5x from where the current price at around 13 cents. So with this, I would like to conclude the video. Hope you liked the content. If you did, please subscribe and give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.